Hello and welcome to Taxpundit.org. Taxpundit is India's most popular and trusted database of income tax case laws. In today's video, we will be analyzing a landmark case study that provides critical insights for tax professionals. Let's dive right into the details. The case under discussion is Jindal Charitable Society vs Deputy Commissioner of Income Tax, pronounced by Delhi Tribunal on the 14th of May 2026. The assessee, a charitable society registered under Section 12A, 12AA and 80G, filed a nil income return for assessment year 2017-18. During scrutiny, the AO observed a significant increase in unsecured loans from Rs 3 crore, 62,71,337 as on the 31st of March 2016 to Rs 7 crore, 97,33,115 as on the 31st of March 2017. The AO added the entire closing balance of Rs 7 crore, 97,33,115 as unexplained credit under Section 68 read with Section 115 BBE. On appeal, the CIT, A, admitted additional evidence under Rule 46A including bank statements, and confirmations from lenders. The CIT, A, deleted the addition for the opening balance of Rs 3 crore, 62,71,337 and for a loan of Rs 5 crore from Messrs Venus India Asset Finance Private Limited, but sustained additions of Rs 51 lakh for three other parties. The ITAT upheld the CIT appeal's decision to admit additional evidence, emphasizing that the CIT, A, provided adequate opportunities to both parties, including obtaining a remand report from the AO. The tribunal held that any evidence which is crucial and goes to the root of the matter cannot be denied for mere technicalities. The ITAT categorically held that since no fresh funds were received during the year, no addition could be made for Rs 3 crore, 62,71,337. Section 68 applies to credits appearing in the books during the relevant previous year. An opening balance, being a carry forward, cannot be treated as an unexplained credit of the current year unless the revenue proves it was never explained. For Messrs Venus India Asset Finance Private Limited, the assessee provided PAN, ITR showing total income of over Rs 21 crore, 58 lakh, bank statements, loan agreement, evidence of RBI registration as NBFC, and proof of partial repayment of Rs 31 lakh, 17,320. The ITAT noted the AO failed to point out any discrepancy. For the three other parties, Shri Pankaj Nakra, Srimati Praveena Gupta, and Messrs Jyoti Installment Private Limited, the assessee filed similar evidence, PAN, bank statements, and confirmations. The ITAT held that the assessee discharged its onus under Section 68. The AO's failure to conduct further inquiry despite having the remand report was fatal. The ITAT emphasized that the amendment requiring explanation of the source of source applies only from assessment year 2023-24 and is not relevant for assessment year 2017-18. Therefore, the assessee was not required to explain the source of the lender's funds. The ITAT reversed the CIT appeal's partial confirmation and deleted the entire addition of Rs 51 lakh for the three parties. The revenue's appeal was dismissed, and the assessee's appeal was allowed in full. The judgment reaffirms that tax authorities cannot make additions based on suspicion alone when credible evidence is provided. Question: what was the main issue in this case? Answer: the main issue was whether the addition of unsecured loans under Section 68 of the Income Tax Act was justified. The AO added the entire closing balance of Rs 7 crore, 97 lakh, 33,115, but the ITAT deleted most of it, holding that the assessee had provided sufficient evidence of identity, genuineness, and creditworthiness of the lenders. Question: why did the ITAT delete the addition for the opening balance? Answer: The ITAT held that the opening balance of rupees 3,62,71,337 was a carry forward from the preceding year and no fresh funds were received during the current year. Section 68 applies only to credits appearing in the books of the relevant previous year, so the opening balance cannot be added. Question: what evidence did the assessee provide for the loan from Messrs. Venus India Asset Finance Private Limited? Answer: the assessee provided the lender's PAN, ITR showing income of over rupees 21 crore, 58 lakh, bank statements, a loan agreement, and proof that the lender was an RBI-registered NBFC. Partial repayment of rupees 31 lakh, 17,320 was also shown. Question: why did the ITAT delete the addition for the three other parties, rupees 51 lakh? Answer: the ITAT held that the assessee had discharged its onus under Section 68 by filing bank statements and confirmations for these parties. The AO failed to conduct further inquiry or point out any discrepancy. The amendment requiring explanation of the source of source applies only from assessment year 2023-24. Question: what is the significance of the ITAT's decision on additional evidence? Answer: the ITAT upheld the CIT appeal's decision to admit additional evidence under Rule 46A, stating that crucial evidence cannot be denied for mere technicalities. This reinforces the principle that appellate authorities have discretion to admit evidence if it is necessary for a just decision. Question: what is the key takeaway for taxpayers from this judgment? Answer: taxpayers must ensure they maintain and provide basic documentary evidence for loans, such as PAN, bank statements, and confirmations. If the AO is dissatisfied, he must conduct further inquiry, for example, issuing summons, rather than making additions based on suspicion. The judgment also clarifies that opening balances cannot be added under Section 68. Thanks for watching this video. You can download the full legal analysis, the official case law, and a concise case digest PDF directly from our website, taxpundit.org. If you have any questions, feel free to write to us at taxpundit@taxpundit.org or message us on WhatsApp at 9326306668. Don't forget to subscribe to our channel for more authoritative legal updates.